All right, middle class investors, welcome to another week. It is September 4th, and looking at a chart here of the S&P 500, we had an up week, and it was, I've been calling for a pullback here for, I don't know, if I change my program and don't call for it this week, then we'll get it this week, right? So that's how that works. But you can see that we've kind of been in this range. I'm really expecting us to pull back a little further, maybe into this area. That's why I have these lines drawn on the chart the way I do. That's what I'm looking for. Is it possible that we don't get it? Sure. It's possible the market just goes up from here. But I still think odds favor, more of a pullback and then up. So that's what that's kind of the way I'm positioned this week. And we'll be looking for the market to do that. As you can see, we've got potentially this narrowing pattern for what could be the last push up, or it could just be the first wave of the last push up, and we could go much longer. But the timing of all this is starting to favor the previous, that this could very well be the last push up. So again, one of the ways I look at it, if you're in a 401k, you see a lot of sideways action. The market's barely broken out, and the odds, you just got to ask yourself, what are the odds of it moving another 10% higher from here versus moving 15%, 20% lower from here? And I think the odds of it moving lower from here are much greater than they are from moving substantially higher from here. But everybody has, you got your own money. You got to make your own decisions. And that's just investing. I mean, people can advise you, but at the end of the day, you have to make your own decisions. You're the custodian of your own account, and therefore you have to make your own decisions. There was a teacher that I had a while back, and he basically said trading is making it a decision-making process. Is a decision-making process, and you could say that investing is the same. I mean, you have to decide to get into certain positions. You have to decide how long you're going to stay in, if you're going to add to the position, if you're going to step to the sidelines. All these are decisions you have to make. So, all right, let's take a look at volatility. Volatility remains very, very low. You can see we contracted. Well, maybe you can see it's at the very bottom of the page here. We contracted this week, volatility, as you can see here, and it just still remains very historically low. We talked about it last week that we might get a push up, although I was talking about extending this box out this way and talking about getting a push up out of here and then maybe a pullback. It's probably another good reason why we are likely to get, we still haven't had the pullback that we need in the market for it to make another leg higher. So that's what we're looking for. That's what I'm looking for. I'm looking for another pullback so that the market can make another leg higher, and then and maybe that's the last leg higher. We'll see. Let's look at the 13-week Treasury. I want to look at there's a lot of talk about the Fed raising rates. We're on record here saying that if this price action breaks out above this line right here, then the Fed will likely raise rates. Maybe I don't know. I can't remember when the Fed meeting is in September, but there may not be enough time here for it to break out in September, in which case it may be December before they raise. But watching this very closely though, because the Fed, I'm sure the Fed's watching it very closely too. They're watching short-term interest rates and trying to decide whether or not they should raise. Here's the 10-year Treasury. Got to move it up again because it's at the bottom here. And you can see here that this lower trend line, if we draw a trend line here, that it's still holding. And as long as that holds, we can expect the market to go higher. A little weakness this past week, but it is kind of it's potentially, going to go lower from here just because this is kind of an inside week. So, the body is all the way inside this this previous candle. And so what would confirm that is if we got a week next week that closed below this low right here, well, then we would expect this to pull back a little further and then maybe lift higher from there, like so. I'm keeping a close eye on interest rates because it could be the catalyst that really causes a lot of trouble for the market, and therefore makes it an important index, an important market to keep an eye on. This is the Dow Industrials, and you can see, of course, I don't have these lines drawn on here, but you can see, put them on there real quick. You can see it looks very similar to the S&P 500, and as a result, what I'm expecting there too is a little bit further pullback into this area, and then higher prices from there, but not substantially higher. I mean, we still have this upper line that I believe will contain the market, or it'll contain it, or it might slightly penetrate this line. Sometimes you get, when you have some lines drawn like this, you might get, because everybody's kind of looking at the same thing, you might get something that looks like that, and then a sell-off. So where you kind of penetrate the upper line and then reverse and go down. So anyway, these are things that I'm watching very closely. I'm going to watch all this stuff very closely, but I'm trying to. There's about 3 different scenarios, and we've covered them about what the market could be doing here, and I'm trying to eliminate 1 or 2 of them as we go. So let's see, what else do we want to look at? Let's look at what can we look at here? Let's look at Japan and Germany real quick. You can see Japan, Japan's got those negative interest rates. Presumably they have some inflation, and that's why their market is rallying, although this could be just a bear trap. In fact, I think that's what we got going on in the United Kingdom here. We've got a counter trend rally in what looks like the early stages of bear market. Germany, same kind of thing. We got early stages of bear market. Looks like a counter trend rally. What I'm looking for on these counter trend rallies and stuff. Let me try that again. There we go. See how this overlaps? There's a lot of overlap here from this price action. Quite a bit of overlap. And contrast that with right here. This is more impulsive looking right here. You can see that the market is not overlapping here. You get kind of a thrust up, and then you get a pullback, and then you get another thrust up, but there's not this isn't substantially pulling back here. I mean, you're not getting a pullback to here and then a rally up. So that's kind of what I mean by overlap. Counter trends tend to overlap more, and you can see there's quite a bit of overlap here. But then there's overlap going back up too. So this could be, a larger topping process, or it could just be a larger pullback and it's going to rally higher here. But, we looked at some of the global markets last week, and all of them are down. In the Dow and the S&P are the only ones that are up globally. So it's more likely that these are just leading the U.S. market, and the U.S. market will catch up soon. But there's no way to know. You just have to kind of make your bet and pick a place where you're going to stop out, and decide that way. All right, let's look at the dollar. The dollar's been, well, that's the euro. Let's look at the dollar first, though. The dollar's been in the news a lot. There's a lot of talk about the dollar moving up now, and I believe that's probably what we can expect. We've got this box up here that this resistance area that we've had on here for some time, and so I'm expecting the dollar to make a move, and maybe this is the week it makes a pretty good move. Maybe it makes a move to here and get a little pullback, and then it makes, chops a little further and then back up again. So, but I do believe the dollar is done going down, and we should get some moves up into this area right in here. As a result of that dollar move, you're probably going to see gold continue to pull back. We've been talking about gold pulling back for a while, and it really hasn't. It's kind of been like the market. It's not cooperating really. I mean, it pulled back a little bit here, but nothing like what we're talking about. But surely over the next several weeks, I think you'll see the gold pull back in this area as the dollar rallies, and silver likely to do the same thing. We can look at silver real quick. And if you are interested in buying any of these physical metals, you might want to wait until you actually get this pullback, because it should kind of make its way down into this area here, and then we should get another bounce that would take us slightly above this high here, and maybe up around this 22 area, and then maybe a little higher even, because we do have a pivot here that might be key. Pivot over here on this left side of the screen. But yeah, I would say at least around 22, and then look for silver. This will just be a counter trend. See the overlap. I mean, let's back out and look at what I'm talking about. You can see this long bear market here, and then we got a pretty overlapping situation, especially once we get a pullback into this area and then a new high. It'll be very overlapping, which means it's likely to be a counter trend. In fact, real quick, let's look at what the Fibonacci retracement would be if we go to the high here, assuming that's the high. It may not be the high. Yeah, that's the high is way up here. Wow, that's way up there. Let's get a Fibonacci retracement on here. Come down to this low right here, and you can see that, wow, yeah, we probably are going to at least go to this red line and maybe a little higher to retrace this initial move down. So, maybe silver actually gets up to, pulls back and then it rallies up here to 27 before we get another leg down. So, and maybe it rallies even higher. Maybe it gets as high as around 35. It's hard to say at this point. You have to take these things. You can't, it's hard to predict that far out in the future. You have to really kind of move from pivot to pivot. So anyway, that's silver. Let's look at the euro. The euro, I think, has started its move, and I'm expecting the euro to move out of this triangle consolidation and lower from here. Now you might get a little bit more of a pullback. I mean, you're not going to get I don't think you're going to move back to the line, but you could get a little move up like this and then have it start making its way down like so, and then a breakout out of this triangle to new lows. So the euro, if you're interested in trading the euro, let's go back over to the profits chart. You know, one of the things you can trade is the EUO. It's a exchange traded fund for the euro, and it's opposite. So, you know, instead of it breaking down this way, we're looking for the euro to break out of this triangle pattern in this direction. Well, see if I can get my line to work here. So yeah, we're looking for the euro to break out in this direction here. So if you decide to use the EUO, let's just look at the EUO real quick and see how liquid it is. You know, some of these exchange traded funds aren't very liquid, and therefore you need to be a little bit more careful with them. What we want to look at is the spread here. So the 2340, 2441. Now that could be because the market's not open. Let's look at the options. Let's look at November here real quick and just see what the spread is. So the at the monies are 65, 75, 10 cents. So 70, 85, 15 cents. So may not be that liquid. It's probably okay from a stock trading standpoint, even though the spread looks pretty wide right here. Just so you know what I'm talking about when I talk about the spread, let's back up here a little bit. There's two prices here. There's this one called the bid, and there's one here called the ask. And so what happens was when you're buying stock, you buy at the ask. Okay, this is the price you pay when you're buying. If you're selling the stock, this is the price when you pay when you're selling, right here. So the spread between the two, so just think of it like I bought it and 5 seconds later I sold it. Well, if the spread is really wide, then that adds to your risk. So ideally you want these to be just a couple of pennies difference. So, you know, you want to be able to buy at 24.41 and be able to sell at 24.39 or something. So anyway, that's just not sure if you guys know that or not, but I just wanted to point that out since we were talking about liquidity. Liquidity, you know, if you look at, let's go back to the chart and let me put on the volume real quick, and I'll show you another way to tell whether or not something is liquid. So if you look at the volume, you can see this thing trades, well, maybe you can't. Let me zoom in. So way down here in the lower right-hand corner, well, you can see that this is the volume here. And down here it says 863,000 shares. So last week it traded 863,000 shares. Now, what you want to do though is you want to look at a daily chart and see what it trades on a daily basis. So on a daily basis, it's not quite what I would consider liquid. Liquid stocks are, you know, 500,000 shares a day. So you just be careful if you're going to trade the euro about getting in and out of this. The market's not very liquid. You could get filled in such a way that you lose a little bit more money than maybe you were expecting to. Now, just to contrast that, let me look at the SPY. The SPY is very, very liquid. We'll look at it in this light first. So you can see here, see how the bid and the ask they're only a penny apart. See that the ask is 218.34 and the bid is 218.33. So if you bought this and then immediately sold it, you'd only lose a penny. And what that means is you can jump in and out of this really easily without experiencing any difficulty. Another way to see that is if you go to a chart and you put on the volume. Let's give it here a second here to load. Hopefully I haven't lost my connect. No, there it is. So now you can see that. Let me zoom down way down here in the corner. This trades 74.8 million shares a day. I mean, that is a lot of volume. That's a lot of liquidity. So the SPY you can fluctuate in and out of pretty easily. So if you're a day trader, for example, if you're trading on a 10-minute chart, here's a 10-minute chart and it traded a peak of 6 million shares here. So just keep that in mind when you trade something. It's one of the reasons you don't want to trade penny stocks. Penny stocks are not very liquid, especially when you're having to trade 100,000 shares or something. It's just not very liquid, and you can lose a lot of money with those. Anyway, that is about it this week. The market's been kind of boring. Hadn't been a whole lot going on, which is kind of interesting because that tends to build complacency, which you can easily see in the VIX. The VIX is telling us that there's a lot of complacency in the market. Let's get back on a 5-year chart. So the VIX is telling us here that there's a lot of complacency. There's not a lot of people wanting to sell. And, that tends to kind of lull people into a state of, just lack of awareness, I guess, more than anything. And so, there's a reason there's a saying called the VIX is low, it's time to go. So just be careful and try to think about the best way to think about making a decision. You don't want to make a decision from a standpoint of fear, but think in terms of probability. Think in terms of, how probable is it that the market goes, 10, 15% higher from where it is right now versus the probability of it, pulling down maybe into this area, this 1750 area. And the answer to that question is, the probability, given that it's already up here at the top of the range, the probability is higher that it moves down here to the low part of the range and not that it goes higher from here. So now having said that, the uptrend, we are still technically in an uptrend. And an uptrend, once an uptrend is in place, it tends to stay in place. So these are competing ideas, but this is the nature of investing and trading. So, all right, everybody. Well, thanks a lot for coming in this week. And maybe next week, we are in September. September's traditionally and historically a more volatile month. So maybe next week will give us a little bit more fireworks, something to talk about. Maybe a move down into this area on our lower trend line. And then maybe next week later next week, we can talk about a rally back, to new highs. All right, everybody. Thanks for coming in. We'll see you next week. Take care. Bye.